So I go away for a week and I come back and there's more developments on tariffs. So we had Trump implement a 50% tariff on Europe, and we can see this led to a pretty risk-off move with equities heading to the downside. Gold had a boost off the back of that as well. However, very quickly, that was essentially paused. We can see we had a risk-on move now, so we had equities rally. Gold had a little bit of a hit on the back of that as well. Euro-dollar also saw a rebound off the back of that. So if we go ahead and have a look at the Euro-dollar chart over here, we can see that this upside trend did take a little bit of a hit during this period, but overall we are still continuing to move to the upside. But let's have a little bit of a look under the hood. So this is my Euro-dollar matrix. So I essentially aggregate information and data from different sources and I put it into one place. And that way I can hold everything I need personally for trading specifically Euro-dollar. So we can see overall, it's actually pretty bearish. The main thing that's changing this overall reading is the trends of the US dollar and obviously the euro. We can see on the higher time frames, so weekly, 1 month and quarterly, we're actually seeing a lot of bullish movement on the euro, whereas we're seeing bearish movement here on the US dollar. But if we look at leveraged funds, we are seeing continuous adding of positions. We did see one reduction here. Similar thing here on the euro, we're seeing a lot of reducing of positions with two instances where they added into positions. However, the amount they reduced was relatively significant. I mean, they added in significantly, then reduced significantly again. Almost exactly the same amount. So it went from 5.7 up to 20, down to 6.9. And then similar thing here, we reduced from 11.9 down to 8.2, back up to 10.2. Now, we've still got the Fed holding rates. They're relatively neutral, along with the European Central Bank here that are cutting with a dovish tone. We've got that rate differential here that is favoring Euro-dollar bearishness. Now, if we just take a look here at the jolts, we do have a softening here. So we have previous at 7.48. The actual came out at 7.19. Definitely undershooting forecast of 7.49 by 0.3. Retail sales here are also very flat. We can see previous was at 1.4. The forecast was 0, so we did overshoot the forecast, but it's still not a good number at 0.1. ADP also really wasn't great here at previous 155. Forecast was at 114. It came out at 62. So the demand is just not really showing much here. We're not, the US just isn't looking great, to be honest with you. We've got mortgage applications here down by 6.2%. We can see previous was 1.1. And actual came out here, or the most latest result came out at negative 5.1. So yeah, very clear that demand is fading, especially within the mortgage sector. Now, what's also interesting here is if we just take a look at the GDP of the US, we had a negative print here, negative 0.3. Now, the technical rule of GDP is if we have two negative prints simultaneously or one after the other, that's technically recessionary territory. So we are heading that way, but we're not there yet. So it's very important to watch the next GDP print. If we come out at -3 or even lower than that, it's a very, very bad sign. Now you can see unemployment rate is holding at this sort of 4.2 area. It's nothing too interesting there. It's pretty stable. We've got retail sales, as I said earlier. We've had a not negative print, but a decrease here from 1.7 to 0.1. Consumer confidence is continuing to take a hit here. Business confidence also continuing to take a hit, and inflation is coming down as well. So the situation for the US is looking a little bit dicey, to be honest. The only real supportive factor I can see here is firstly leveraged funds as well as the central bank policy. And obviously we still need to see what happens after this 50% tariff pause or hold, because if that follows through, we could see a continued downside for the US dollar, especially if we do see another negative GDP print and we start seeing more signals of a recession. The US dollar is going to have a very, very difficult time. Now, on the other hand, if we look at the European data, we can see GDP went from 0.2 up to 0.3. So they've had an expansion, whereas the US had a contraction. So 0.3 definitely isn't great. This isn't amazing things to see, but it's stable. It's something that's a little bit more hopeful in the US, to say the least. So we can see here that the services and the manufacturing PMIs are very weak for for Europe. We had previous 49 for manufacturing, and services was 50.1. Both came under. And also undershot forecasts as well. So while the US is looking a little bit unhealthy, to say the least, to be quite honest with you. The European data also isn't looking great. It's very fragile. However, I wouldn't say that Europe is necessarily broken, if you will. So the fact that leveraged funds are reducing positions in the euro, adding into the US dollar, it can signal that investors are expecting some volatility in the markets to come. We still have the ECB actively cutting rates. The Fed are still holding rates. But again, if we do start seeing the markets pricing in potential recessions, then it's going to get very problematic for the US dollar and the US dollar bulls. So I do still view euro dollar as expensive. I think it's very overvalued for the situation it's in. Bearing in mind, a lot of the euro strength that we've seen over the past couple of weeks has been majority come from the weakness with the US dollar, just capital flows. The euro is the next liquidity asset from the dollar. And obviously the reason for that risk off move came from the US. So investors are not going to the US dollar for a risk off asset at the moment. So that's one of the things that euro dollar is doing very well from. But I'm not necessarily a bull. Maybe short term, yes, we could be bullish euro dollar. However, I'm still sitting in bearish territory. So in the short term, we could see the euro dollar maintain this sort of 1.14 level to 1.15. However, once tariffs are done, priced in, and that's sort of old news, I would be very happy and very confident to actually say that euro dollar could very easily come back down to visit this 1.1 level. Bearing in mind, there is still a lot of left side traffic here that does need to get corrected, in my view. Obviously, it doesn't 100% have to, I'm not saying it 100% will. But I would like to see that, and that is generally what we do see in the euro-dollar behavior. We often come and correct aggressive upside or even downside moves. So I will be looking to go for shorts within this area, and if we can come up to 1.15, I'll again look to go short. This is because I trade DCA. I only short euro-dollar, that's my view. However, if you are a swing trader, day trader, and you can buy and sell, I honestly think long positions actually make more sense in the short term, then start looking for shorts once we get more clarity on tariffs. That's my personal idea at the moment. As I said, I've only just come back off holiday, so I do need to still do a bit more research. But for now, this is what I've come across, and this is just my views. But if you watch the channel, watch the streams, you'll see my developing ideas and thought processes. So guys, please like and subscribe. You can join my Discord in the description, get my signals and education. You can also join the free Telegram where I send daily analysis and data. Guys, see you later. Thank you very much for watching, and stay safe.